Whilst many people have heard of a self-invested personal pension plan or a SIP, the term SSAS, I think, is less well known. In fact, SSAS, which stands for Small Self Administered Scheme, was the forerunner of the SIP. It was popular with business owners as a very tax efficient way of extracting profits from their company while saving for retirement. They liked it, I think, because it gave them control over the money instead of handing it over to an insurance company. And like the SIP, a SSAS is usually set up as a money purchase fund, which means it's a pot of money rather than a promised pension. Also like a SIP, the rules on contributions, benefits and taxation are exactly the same. So who can have a SSAS? Well, the SSAS is set up by an employer, usually for its business owners and its directors, sometimes for key personnel. And many of our SSAS clients are family groups, often 2 or 3 generations. All the members are also trustees, and your SSAS would not be tied to a particular provider, so each scheme is individually registered with HMRC, which makes it far more of an individual plan than a SIP. You and your other trustees choose where to invest the fund, and you're responsible for deciding who will administer and prepare financial statements and pay benefits. Although HMRC doesn't currently insist on a professional trustee or scheme administrator being involved, they do prefer one to be appointed. So most member trustees prefer to engage someone who has experience and knowledge of running a SSAS. So how do you set up a SSAS? You'll need trust documentation, which will have to be registered with HMRC before any contributions can be paid. You'll also need to set up a trustee bank account. What's involved in running a SSAS? Well as making and dealing with investment decisions, the trustees are responsible for keeping track of all income and expenditure, reports to HMRC, calculating and keeping records of benefits and dealing with the pensions regulator. So if you appoint a professional administrator, they should deal with all of that for you, which might make life easier. Why choose a SSAS? Well, the SSAS has lost popularity with financial advisors, I think because a SIP is simpler to set up and run. That said, I think that for a controlling director of a family-run small business, the SSAS is an interesting and possibly more cost-effective way of setting up a family pension scheme, particularly if you want to invest in commercial property in a tax-efficient way. So there you have it, a brief explanation of a SSAS and who it might suit. I hope that's helpful. See you next time.